And we're back with another episode of Pure Perspectives. How we doing, Gary?
Doing great, doing great. What's
Gary's in
going on?
Texas.
Lots to
I'm in
talk about.
California. There's a lot happening. We
Yeah.
have a interesting topic today, but before we get there, smash that like button. Leave us a like, leave us a comment, hit that bell icon so you're notified when we push out some more content. Now that that's out of the way, the news we're talking about today is credit score requirements and what is coming in the near future as far as the requirement in order to qualify for a loan. Gary, tell us what's going on and why it's important.
Yeah, so the headline is Fannie Mae recently announced they are removing the 620 minimum credit requirement. So a little bit to unwrap there. That will start this week. There's going to be an updated Desktop Underwriter update sometime either the 15th or 16th of November. Once we have that, then we'll have a better idea what that looks like. But, essentially, just like any products, like even on FHA, when you go below the, kind of the standard, 580s or, whatever the case may be, it could get a little sticky. So my guess is if they do remove it, it's going to come with some freight, right? More down payment required. You're looking at, potentially other, higher LLPAs or costs within the loan. So it's still TBD on what that's going to look like when we get it and get availability to price it. So we're holding steady, waiting on that. But could open the door. My thought is like there are some options that make sense for that. So like typically I would just say, hey, look, it's probably better to go FHA because the rate's going to be a little bit better.
Yep.
But in some cases, the house might not qualify FHA. And so you need to go conventional, right? And so I think we're still in a TBD stage, but this is part of the government trying to come up with ways to make home ownership more affordable and more accessible to more people.
Yep.
That's kind of the big takeaway.
So a couple things you mentioned there. One, just for everybody on the video, Desktop Underwriter, what is that and kind of how does it factor in?
So that's Fannie Mae's engine, automated underwriting engine is what that's called. And so when we submit a loan, we select what we call Desktop Underwriter, or DU in our space is what everybody refers to it. And that's where we get the information if we can get the file approved or not. And then it will then in turn present us with the conditions that are required. So if it's a self-employed borrower, maybe they need just 1 year of tax returns or 2 years tax returns, bank statements. How many bank statements do we need to prove assets? It just kind of gives us the breakdown of what the file actually is going to be required for Fannie Mae to approve it.
So in other words, when we have customers reach out and they want a pre-approval, this is the process we go through. We run it through DU, Desktop Underwriter. It's basically an algorithm that is the initial check of like, are there any blockers for this loan going forward? Based on the information that the customer has provided us and we've put in the system, are there any roadblocks that need to be addressed on the front end? So it's not the final, but it's the first step saying, all right, we're in a good spot here. We can move forward. And then the other piece was the LLPA, loan level price adjustment. So when you say that there's probably adjustments there, are you saying that, look, like by lowering the requirement for credit, it automatically increases the risk for lenders, right? Default risk goes up with lower credit. That's the kind of tug of war that goes on. So are you saying that to account for that, we're going to see more LLPAs or loan level price adjustments to account for the risk?
I mean, they have not announced that, but the kind of the writing on the wall is, I mean, it's, I mean, it's anytime you add more risk to the file, whether you're going conventional financing or let's say a bank statement loan. Well, that bank statement, because we're not backed by Fannie or Freddie, there's more risk. And that investor is saying that, hey, we're willing to do this, but it's going to cost you a little bit more.
Yeah, you might need some more security.
Yeah, it might be just in terms of rate. It might be a 6.25 on a conventional versus 6.75 on a bank statement. There's different ways to do that, or the cost of that within that rate. Credit score, there's different factors that go into that, but there's different levels. So loan to value, is a usually if you drop down a level below certain thresholds within the stack on the loan to value, you'll see your pricing improve the more leverage you put down, because the investor's like, okay, hey,
you're putting skin in the game.
You got more skin in the game. Versus I'm putting the minimum down, then you're going to be at probably the highest threshold of cost.
Yeah, so I guess the takeaway is, so we're thinking this month, right? We'll start to see this from lenders.
Yeah.
So this month, I think the takeaway is it's going to put more options in play for more people.
Yep.
The impact on cost, rates, all of that is TBD. We'll see how that shakes out. Once we get a read on how this is playing at different loan levels, we will provide another update. But at the end of the day, I think this is good news, right? Those people that thought maybe they're out of the money as far as being able to obtain a reasonably priced loan are back in play now.
Sure. Yeah. It's definitely, it's just more options. There's, again, DTI, income stability, reserves, the property type. Is this a investment property? Is this a primary home? All these factors will lump into the overall quality of the file, and then we'll have a good idea next week. So probably next week's call, hopefully we'll have some ability to price a couple deals just to see what they look like, and kind of give more feedback from that standpoint.
Awesome. Well, thanks for the update, Gary. Again, Fannie Mae is dropping the minimum credit requirement score. Should put more people in play. We will keep you updated as we start to see pricing and we start running real world scenarios through this to see what the impact is, and we will report back. But a reminder, give us a like, give us a subscribe. Stay tuned for more content. Gary, thanks as always.
Always.
Get out there and crush it today, okay? I need you to crush. We need crushing. So
We're crushing. We're going crushing.
Awesome, everybody. Have a great day.